if I double my money, okay, and I pull out half, think about this for a moment. You double your money and you pull out half. That means you pull out your original investment out of the market, right? So what are you playing with now? You're playing with the house's money, or another way of saying that obviously is you're playing with your profits. You pulled out, there's zero risk in the trade. There's zero risk of you losing your original capital. There is some risk of you losing what you gained. But think about this. Your investment can go to zero and never yield you anything forever, and you will have not lost your original capital. Now, when you can put yourself in that type of situation, okay, you gain a great deal of confidence in playing the market like an institution, like a Warren Buffett, like a professional. So it's all about risk management, right? So whenever something doubles, I'm going to aggressively pull a good portion of my money out. Now, I told you on the last run-up, I pull 40% out, all right? Not 50. But it's the same concept. It didn't go one more leg for me to do another 10%. That's all that happened. But I'm not one of these go to sleep for 10 years and hope everything is peachy and beautiful when I wake up. I'm a more active player than that, even if I'm playing long term. So if I'm planning on holding something for a very long time, 5 years, 10 years, 12 years, it depends, right? I will still do some active profit taking when I feel the item gets ahead of itself. When I feel that the move to the upside, as an example, is not sustainable. So I believe that through those movements, I can make more and outperform the individual who does not take advantage of those profit-taking moments on extreme runs to the upside than someone who rides out all the extreme ups and down movements over time. So I'm active in the middle of my origination point and the final destination point. I'm taking profits, I'm accumulating down here, taking profits up here, accumulating down here, taking profits up here, and it's not just buy, pray, and hope. I'm active in between. So I combine in a more active style with a long-term accumulation style. And this is one of the ways, this is what I teach my wealth traders to do, and it's how and why we have outperformed virtually every benchmark out there in every professional firm or well-known long-term market player. Now, granted, I'm not saying because I have trounced their record, I've outperformed almost everyone. I'm not saying that I'm better than them, because let's face it, my level of capital is nowhere near their level of capital. So it's very difficult to produce the returns I make with my capital with $158 billion. That's the challenge that Ray Dalio has. He's got $158 billion under management. All right. So to trade 20 million versus 158 billion, I mean, there's no comparison. I can double 20 million. I can double 2 million. I can double 1 million much more easily than anyone can double 158 billion. You understand? So we understand that it is easy to outperform those guys. They have to turn the Titanic. We can turn it like that. And so we should be outperforming them. If you're not outperforming Warren Buffett, you suck. Period. Warren Buffett became the most celebrated investor in the history of the world by producing an average annual gain over the past 38 years of a little bit better than 15%. I did 15% last week. Do you understand? Think about this. Warren Buffett has averaged a little over 15% annually a year over the last 30, a little less than 40 years. That's his average. Go look it up. It's crazy. All right. And that can be a weak performance for us. So, but they've got tens of billions of dollars that they're dealing with, in some cases hundreds of billions. It's difficult, right? You don't get the doubles the way we can get the doubles like that. You can't buy enough to make it count. You know, $158 billion fund, how can you buy, even if you get something that doubles and doubles and doubles, the percentage of that investment can't be big enough to impact your 158 billion. So it's not like they don't get the doubles. It's how do you take the whole thing to double? It takes years and years and years and years for them to double that. It might take us a couple of months. It might take us a year. You know, it's a different game.